So the topic on everyone's lips this week is the Auckland housing market a bubble? Well, let's find out. Some new research has come out this week which says yes. We'll put the link to it below this video, and we'll explore a little bit of the findings of that research in this Whiteboard Friday. So first up, we all know that Auckland housing is unaffordable. In terms of, compared to income, house prices are roughly 8 times the average income in Auckland, which puts it in the top 10 least affordable cities in the world. Compare that to the rest of New Zealand, which is roughly 5 times the average annual income. Even that is high by historical standards. But that doesn't necessarily tell us it is a bubble. It might just mean that we have a supply problem. We need to build more houses, as a lot of people are suggesting. But this new research really points to it not being a supply issue, and that's because it compares house prices to rents. Now think about it, if you're an investor, one of the reasons that you really should be buying houses is for rental return. But it suggests, this new research suggests, that the average rental return in Auckland at the moment, given current prices, is 3%. That's incredibly, incredibly low. You'd be better off putting your money in the bank. So house prices have been rising in Auckland, but rents haven't been rising. That really suggests that supply isn't the major issue up there. Otherwise, rents would have been rising as well. Let's think about that for a moment in terms of whether you should rent or buy. 3% is a very low return, and that's before any of the costs of housing, but we'll put those housing costs aside just for the moment. If you're thinking of buying that first home, if you're lucky in Auckland, you're probably going to be paying about $500,000 for your first home, and that would be a cheap one. So you'd need $100,000 deposit. If you're going to rent, you'll be paying, remember, 3% of that $500,000, which works out at about $15,000 a year. Now, at the same time, you'd probably put that $100,000 deposit in the bank, so to compare apples with apples, overall the rent is about $12,000. Over here, you've got a choice to buy, and of course, once you've paid the $100,000 deposit, you'll be paying about a good hunk of mortgage on that remaining $400,000. So you're going to have a mortgage at around about 6% on that $400,000, and that works out at about $24,000. As you can see, a lot more than you'll be paying in rent. That $12,000 that you're saving by paying rent rather than the mortgage, you could stick that money in the bank and have quite a healthy nest egg over 20 or 30 years. So if you're buying a house in Auckland right now, you are relying on house prices rising just to make sure that you are benefiting from owning a house as compared to renting. And that is really the driver of house prices going up at the moment. People are betting on house prices going up, and that is the definition of a bubble. And at the moment you may think that's fine. House prices are going up, so why wouldn't they continue to go up? I might as well buy. Well, that's the risk that you'll take, because eventually in a bubble, house prices stop going up. They can't keep going up forever, and that is when people get hurt. So the message is, Auckland housing market a bubble? It looks a little bit like it, so be careful.